Joining me with more insight on the day's trade is Ntsika Ntsokolo from Sasfin Wealth. Ntsika, thanks so much for your time and coming through to studio today. Maybe let's start off with your reading of markets activity, right? Going into this week, it was red screens, and then we got some hope after NVIDIA's results were released. But here we are, days later, back in the red. What do you make of what's going through and all these concerns about an AI bubble?
Afternoon, darling. Thank you so much for having me on. I think it's been really one of cautious optimism. When you look at the actual numbers that NVIDIA printed, they were absolutely stellar. I mean, we're talking about $57 billion for the first quarter, $51 billion of those dollars coming from the data center build out. So initially, we saw a lot of momentum towards the AI play, but as the day progressed, as we saw a sharp decline within tech stocks and a sharp drawdown. I think again, exemplifying the feel around an AI bubble and what seems to be an overrun market with regards to tech.
And, you know, sticking with the market that seems to have run, right, there's also been concerns around the Fed, concerns around the labor market. We got September non-farm payrolls out earlier this week, but we're not getting the October print. That'll be mixed with the November print. How are you reading that and how the Fed will respond to that, or how then it clouds some of its decisions come December, especially when we are also seeing that those Fed rate cut bets have been lowered?
No, certainly I think all eyes look to the Fed at the moment. I think the anticipation around the Fed cuts is what's driving not only the gold price, but the depreciation within the dollar price itself. And as we look forward, I think there's a lot of fear that, in fact, we won't get the rate cuts that we anticipated coming into December. And if that does come through and it stalls through in terms of the release of capital back into the market, I think it could be pretty hairy for markets going into the earlier part of next year. And certainly, I think with regards to the non-payroll numbers, I think while we're coming out of the longest standoff which we've ever seen in U.S. history with regards to Democrats and Republicans, and the lack of data coming through and the rate at which it's coming through makes it very difficult as those who have to invest capital in terms of making decisions around exactly where to allocate that capital adequately. And
we don't need to deal with those problems, right? With, the SARB coming through and giving us a young Christmas present, something to look forward to as we head into festive season shopping, cutting rates by 25 basis points. Your view on that, was it expected? Because it did seem like earlier in the week, economists were divided.
No, certainly I think, and certainly you can also see it in the US, the split between the decision makers, whether or not it's the right time to make these cuts. We certainly see that within the South African context. We finally got our early Christmas gift. This will certainly help markets, retail investors and retail stores open up their books and hopefully allow us to do a bit of shopping going into Christmas. I think it was justified and probably certainly anticipated within the market. I think longer term, those can be harder to justify more cuts, especially if the US does stall on their own cuts going forward.
All right, you talk about the retail sector, this, being good news for those counters. In particular, I want to look at SPAR out with an update and flagging a downbeat earnings picture. But, of course, exits from Poland and Switzerland, putting it in a more better position when you look at its balance sheet, as it also managed to reduce its debt. Your thoughts on that update? I mean, that grocery retail sector, quite competitive.
No, certainly. It's a very competitive sector, and a sector that really has very thin margins, where your value proposition seems to be really a race to the bottom, where people are, looking for the cheapest and greatest deals they can find. And so we're seeing a lot of downgrading with regard to the middle class, moving to lower LSM shopping, things like Boxer and the like. And with regard to SPAR's update specifically, I think it's been a big year of cleanup. You're seeing a large amount of write-offs, which does show a lot of real progress in terms of right valuing the business. I think, chopping off the stores and cutting off the parts of the business that weren't exactly performing through these impairments does actually bolster the business and position it for a more robust year next year. But very tough set of numbers. I mean, we're looking at operational earnings down 40 to 50%, which is a very ugly number to look at. But at the end of it, we think certainly Mr. Sums is doing the right job and pointing the business in the right way.
Do you think he can still compete with the big dogs?
I think Checkers is the 100-pound gorilla in the room. Shoprite and Checkers are to a point of overtrading, right? When you look at market penetration and the fact that they continue to steal market share, it's difficult to be on the roads and not see one of your Checkers 60 bikes, which I think speaks to the ubiquitous nature of just not only the shop, but how they've diversified the way in which they actually deliver groceries to us now. So as that landscape changes, I think Spar still seems to be behind the keel, very much struggling to strategically position itself between the premiums, the premium likes of Woolworths and your discount shoppers like Boxer and the rest.
And interestingly, you mentioned Checkers 60, and we just heard from Walmart that will be, entering that fast, quick delivery services business-like model with what it's launched at the Clearwater branch. I think they opened that store there a few weeks ago. I want us to talk about Blue Label Cell C listing coming through soon. They've cut the offer price to 26 Rand 50. I saw that really weighing on Blue Label's share price. It was down over 5% the last time I checked. Let's pivot into Cell C, right? The value proposition. Are you seeing value there? Also looking at all of the other telcos operators, it does provide an alternative model.
No, certainly. I think the most interesting thing that we found within this, when you look at Cell C specifically as an operator, is how they work a lot with the MVNOs.
Yes.
So if we look at our banks and how they've also seemingly entered the telco space, what we found is that the offering that Cell C provides is for all these kind of banks to piggyback tower energy off these and act as as active cell phone providers themselves. So I think the value proposition exists. I think what they offer is unique to the market, and what they have captured is somewhat unique. Does it compete competitively or naturally with the likes of MTN and Vodacom? I don't necessarily think so. I think it still sits further down the value chain with regards to quality, but certainly the listing will allow the likes of Blue Label to unlock a lot of capital, hopefully pay back a lot of debt, and hopefully reposition the business to not be one with this kind of albatross of a business hanging over it.
All right, quickly, we've got about 30 seconds. Where are you seeing value at the moment? What's your stock pick?
My stock pick is NVIDIA. It remains NVIDIA. I think you can make a lot of money staying in your mega caps. I think that the rollout of these data centers is going to continue to fly, and is going to continue to add value to people's lives. And I think we're still only seeing the beginning of the cycle. So I'll tell investors to stay sharp, especially those who are long-term investors, and to hold on to their stock. And that this data center story isn't over yet, and we certainly would be positioning ourselves and our clients towards the tech play.
All right, let's leave it there. Ntsika, thanks so much for your time and sharing your insights with us. Now, that was Ntsika Ntsokolo from Sasfin Wealth.